Beautiful day. Hope you're having a wonderful day. I'm B2B. That is Professor Mark Putrino, and we are ready for a beautiful day. So let's go, Mark. What do we got in the market today, buddy?
Um,
You got to share your screen.
yeah, just running a couple minutes late today. Well, we got
Morning
CPI coming out, right?
at 8:30. Yes.
Let me share my screen here. And you see the James Webb Hubble or the James Webb scope might have found proof of extraterrestrial life.
No, that's awesome though. See, I told you, man, they're real.
Yeah, of course they are. The problem is it's so far away.
Yeah.
James Webb Telescope. Um, yeah, so look at this. Yeah, pretty amazing. It's just amazing because it's just so far away. It's like the deficit. It's right. I think it's so big that people really can't get their minds around it, which is why people don't pay attention to it. Um,
Wow.
discover
Look at
signs of a
that.
vast ocean on the planet K218b. It's 120 light years away. New type of habitable world. Webb may have detected a molecule there that's only linked to life, but much more research is needed. So, yeah, dude, there's something going on with these UFOs, man. I mean, I don't know what,
Well,
but
the cool thing is, right, is like, you'd have to think that as many stars are out there, there's so many inhabitable zones around those stars. So, I mean, it's logical that there'd have to be extra life out there.
dimethyl sulfide would be smoking gun. Yeah, I mean, here's the thing. It's like Buzz Aldrin said. It's like, yeah, there's life out there, but they're so far away. We're never going to be able to meet with them. But then again, why would we even want to? Maybe they're going to come here to eat us or to enslave us.
Right? Maybe they like red meat.
Like the Twilight Zone, bro. What was that one? To serve mankind, and they thought it was a cookbook.
Yeah.
From the alien scene. All right. So anyway, let's see what is going on this morning. And like I said, there's this. The big number is coming out at 8:30, so we'll check that out when it comes out. Let me just go see what's on over here. What the hell, man? I can't stand this stuff here. It's like I have an account. Why do I got to log in? All right. It's owned by the Wall Street Journal. So if I'm in the Wall Street Journal, I should be able to see that, right?
You would think.
All right. So first thing I want to do is check on oil because it's continuing its move higher. This is your classic continuation pattern here, right? Where basically what happens is this, right? Market's moving really higher, moving a lot, and you got aggressive buyers out there, and some of the aggressive buyers say, this is getting out of hand here. We might have driven the price up here, so let's step aside. Let's go to the sidelines and let's see if the price comes back down. So as a result, you get this kind of sideways trading where you get very low volume. And let me see what the volume looks like. Yeah, so you see how the volume, well, I mean, it's not super low, but anyway, sometimes the volume is kind of not as important as other things. But now probably what's going on here is the people that were buying it said, all right, well, we've been out of the market here for a week and it's not going down. So let's get back in and go buy it and go start buying it again. So that's what's happening. Now we get this breakout to the upside. So my guess is that we get up to around $93. And then we're going to run into resistance. And that's because we have resistance back here. So you have people who bought here who are like, oh man, I made a mistake when the price goes lower. And they tell themselves if it gets back to their price, they're going to sell. So you get these remorseful buyers from here placing sell orders here, and it could cause resistance. So this is why things tend to run into resistance at former peaks. If someone says something runs into resistance at a former peak, let's see what coffee futures like. There is a reason for it. It's not just like, oh, it's just some old market wives' tale type thing. It's like, no, it's like legitimate. That's just in psychology. So here we are in the coffee market, right? We don't really look at coffee futures too much. I don't drink coffee. But look at this. So here's coffee. that last August gets up to this level here, same as this resistance here, and the same level as this resistance there. So we can see we get resistance at former peaks. And if we look in our technology sector, it's very, very apparent.
Good morning, Kyle.
Let's see. Okay, that's cool. All right, so here we have our tech sector. It was pretty weak yesterday. I guess I kind of missed out on that. Wow. Down one. Well, I mean, it doesn't seem like it was a big move, but what I do is I look to see where something closed versus where it opened. I think in a lot of ways that's probably more important than comparing it to the day before. So actually, I got that backwards. I'm sorry. So it was down 1.8%, but it was a particularly weak day because we closed towards the lows of the day here. So we were up in the morning, but by the close, we went all the way down. And importantly, we closed at the lows of the day. But you can see here this whole concept of how we can run into resistance at former peaks, right? So resistance there was resistance over here, resistance here, it was resistance over here. I think a lot of people really kind of overcomplicate what they think trading is. And it's not as complicated as it seems. The tough thing is the psychological aspect of the being able to take your small losses and the ability to let your profits run. That's the hard thing. People spend all this time coming up with all these, amazingly complex systems, a lot of artificial intelligence, or there was a big thing going on maybe 5 or 6 years ago where the Wall Street firms were hiring like scientists away from NASA and so forth and so on. And guess what? The systems that they've made, the track records really have not been that good. And that's because I think they approach the market through this prism of everything needs to make rational, logical sense. Like trading is like a chess game, and chess is in a chess game, the pieces always move the same way. The rules never change. But in trading, things do change. The market changes as it evolves and goes through time here. I mean, certain principles are always going to endure, but the market acts different at different times. Like if it acts different at a top than at a bottom. Just say we're in a bull market, right? People are bullish, market's moving higher. Company releases earnings. All right, well, market could interpret those earnings as being good, and the stock continues to move higher, okay? The company could report those exact same earnings when the market's going down, and maybe the market doesn't like the numbers, and the stock sells off. So you get the same numbers, but you're in the market is acting differently.
That's just
so
like,
it's not just, it's more like a poker game, because poker, the rules are the same. You have the strategy, but the person on the other side of the table has emotions just like you do. Remember, every trade, there's a buyer and a seller. So every trade, there's someone who thinks the market's going up and there's someone who thinks the market's going down. So,
I was thinking that's exactly what's happened with Baba here in this last time. Baba had those blowout earnings and the stock just got crushed.
Yeah, I mean, there's no like hard and fast rule that always works the same. You got to stick to your principles, but you got to have flexibility too. I mean, people spend too much time, I think, trying to link stock market action, or I should say financial market action. In my opinion, people spend too much time trying to link it to some ulterior news story that's going on. And sometimes that's the case, but a lot of times it's not. Like, for example, when we got up to here, here's Baba. All right. When we got up to here, why did we sell off? Well, I would say as a trader, it's because you got people that were remorseful buyers trying to sell here, and you got people that were remorseful buyers trying to sell over here. Now, what happens in the market's moving higher is there's not enough supply or not enough selling interest or sell orders to fill all of the buy orders. So the buyers are forced to pay higher prices if they want to entice a seller off the sidelines. Like, they might come into the market here and the buyer might say, all right, listen, I'm willing to pay $95 for 1 million shares. And someone might say, well, I'll sell you 1,000,000 shares, but I'm not going to sell it to you at 95. I'll sell it to you at 98. Hey, I'm the lowest price in town. You want it? You got to take it. You snooze, you lose. So the market moves higher when there's not enough sellers floating around. Now, all of a sudden, some of these traders notice, oh, look at that. Baba's not moving higher anymore. Got to a level that was resistance before. This must mean that there's new sellers coming into the market. So I'm afraid that these guys are going to knock it down, knock the price down ahead of me. So I better reduce the price that I'm willing to sell at. So you get a snowball effect of sellers undercutting each other. And if you were to put on the news this particular day, I mean, I don't know what happened on that day, but they're going to be trying to attribute this move to something. Oh, Baba is down on concerns over Taiwan, or concerns over the debt ceiling, or the China slowdown. But the reality is, it's probably just a technical move. I mean, what here is so different than here that we have the exact same valuation? How is it possible that this company gained so much value between November and January? So in 2 months, the value of this company increased by about 50%. Okay. And then 2 months later, it had declined by about 30%. All right. So how could that possibly happen? What could have possibly gone on at the company that would have changed the valuations by that much? And the answer is nothing. The answer is, well, it's the psychology. Investors' psychology has changed. This is really email.
That is annoying.
I know. Password. I don't remember what my password is. I mean, I get this because I subscribe to the Wall Street Journal. So if Wall Street Journal's working, that should be working.
You would think.
Yeah. All right. So anyway, let's go back to this. Let me start again here. So the S&P. All right. Pretty much not doing anything in the market this morning. I'm going to get rid of these lines here. And this is kind of what we were expecting, right? A little bit of a bounce when we got back down to here. Now I suspect we're going to start going. I mean, I don't know, but my guess is that the CPI number comes in higher than expected, and that puts some pressure on the market. And the reason why I say that is because we've had this big run up in oil. The CRB index has been really kind of moving. Let's take a look at that. This is let me just bring this up. So this is a benchmark that tracks commodities prices. So the CRB, it used to be the Commodity Research Bureau. That's where the name came from. And oil is the biggest part of this, as it is in pretty much any commodities thing, because oil affects everything, right? It's just like banks affect everything. Like, not everyone needs wheat, but everyone needs oil, and everyone needs a bank. But look at how this is really starting to move here. I mean, this is, all right, let's just get an exact number here. So since the beginning of July, this particular index is up 11%. So, you're going to tell me the inflation is 3.2%. I mean, I don't think so. That's not what it says here. And when we have the whole big, myth of inflation was transitory, so forth and so on. Well, that they started saying that, I think, like around here in early 21. Oh, this inflation is just transitory, which is really just a play on words, because all inflation is transitory. All inflation comes to an end. But this is where we really took off, when oil prices really started to move higher, right? But anyway, just going up to the current time here. I mean, that's it's not an unprecedented move, but it's a big move. All right, so let's
DBC
go see.
up $1.50 too in the last 2 weeks.
What's that?
DBC.
Oh yeah, all right, yeah. So this is an ETF that tracks commodities. So if you think there is inflation, you can buy this. You can even think about it as like a hedge, right? I mean, it's like if your day-to-day life costs more to do stuff. Well, if you throw some of this in your account, you get a little bit of a hedge, because if inflation keeps going up, well, this will keep going up as well. So we can see here that this has been up about 14% since the beginning of June. So I don't know. I mean, I think it's kind of a pipe dream to have this talk about like, oh, the Fed's not going to raise rates anymore. As a matter of fact, they're going to start cutting rates. I mean, I don't see that happening.
Yeah, they don't have a choice.
Yeah, I mean, I just the job numbers are still good. I mean, they're slowing down a little bit, but they're still good. All right, here's our healthcare, and this really here showed this chart here. I mean, you can see it on pretty much any chart, but you see some of these technicals. Like, look, where did we find resistance? Right, the exact same level that we found resistance before. And how is it that you see these same patterns or these same things play out on different charts? Like we're looking at resistance becoming resistance in the healthcare sector. Well, we saw the same thing happen in the coffee market. And it's because there are people that are trading these things. And if you look at a chart the right way, what you're looking at is the psychology of the people that are trading them. So coffee traders have remorse, stock traders have remorse. So that's just how it is. Now, if a lot of the technical analysts aren't very good, if you ask me, and it's because they don't really seem to get what it is that they're supposed to be doing. In other words, they just kind of look around and they say, oh, look, this looks like a wedge pattern. This looks like that pattern. This looks like this pattern. This looks like that pattern. And they don't really understand the principles. Now, if you understand the principles, you don't really need to remember the names of the pattern. It's like, this is your descending triangle, right? You don't really need to remember that. I mean, it's a pretty easy thing to remember, but so it's not like you're going to forget it. But the important thing is not to say, oh, that's a descending triangle. The important thing is to say, oh, look at that. The support is kind of staying the same, but we get these lower highs. That tells me that the sellers are getting stronger, are more aggressive, while the buyers are just kind of hanging out. All right. So that's what this pattern is showing us. Here we get the fast move down, and when we reverse, we get the fast move up. This is something that we've kind of started talking about recently. And what is this? Is this a V pattern? Is it a whatever you want, a pattern you want to call it? What I think is, hey, we made this fast move down through these price levels. Oh, now we have this big reversal day, or this could be what you call a bullish engulfing pattern or an outside reversal day. See, the red team is in charge, and we get down to here. And on this particular day, May 31st, it looked as though it was going to be another down day. See, this is where we opened on this day. This is where we closed on this day. And the next day, this is the open. So it looked like it was going to be another down day. Well, what happened? Okay, by the end of the day, the buyers came in and they reversed everything. The buyers took control. Sometimes a reversal, or I should say a change of leadership, takes a long time to play out. That usually shows up on a chart as something like what we would call a rounded top or a rounded bottom. Sometimes things take a short period of time to reverse, and that kind of shows up as a V. And then sometimes you get these reversals that occur just in one day. And that's what happened here. So it took one day for the buyers to take leadership back from the sellers. So this is what we're looking at. It's not rocket science. It's supply and demand. If you can understand economics 101, supply and demand, you can understand how, and if you account for the fact that there's this psychological thing going on, then you can understand how this stuff works. If you don't, you're going to have a hard time. If you there's people that always, I do admit I get a little frustrated when people are always asking me, oh, why is this up? Why is it down? Why is this down 13 basis points? What happened? It's like nothing. It's just random noise. I mean, it's not a big move. Why is this up? Oh, well, some healthcare company just introduced a new product. I saw it on Bloomberg TV, and the person was English, so they sounded smart, right? But it's really like, oh, well, I think this is just buyers cutting in front of each other. When you place a trade, you got to understand this, right? I think it's easy to visualize it if you look at this. So I'm going to bring this up. I'm going to see floor trading 1950. All right, so now this is how it works, right? So you're a money manager, okay? And you decide, oh, I want to buy 1 million shares of XYZ. And this doesn't really happen anymore because the floor really doesn't exist anymore, but I just think this is a good way to visualize it. All right, so you're a money manager, you want to buy XYZ. You've done your research, say you're managing a mutual fund or say you're managing a hedge fund. You've done your research, you think that this is a good company, you think it's undervalued, you think it's going to move higher. So what you do is you would call or electronically contact your broker, the broker that you trade with. Just say you called Goldman Sachs. You're going to call what they call in the trading world the upstairs desk. So basically, there's a trading desk at Goldman Sachs in their building, and someone there is going to take the call, and you're going to say, hey, this is so-and-so. I want to buy 1 million shares of XYZ. And they're going to say, okay, you have any specific instructions? And I would say, no, just try to buy it somewhere in line. So they call someone down on the floor, their floor broker. It's hard. I know it's hard to see, but the floor broker's poster on the side of the wall over here. So they're going to call their Goldman Sachs floor broker, and they're going to say, hey, listen, we got an order to buy 1 million shares of XYZ. And the floor broker is going to say, okay. The floor broker is going to walk over to the specialist where they trade this particular stock. Every stock is traded by a specialist, right? Or the specialist is supposed to run it, keep track of it. So if you wanted to trade that stock, you had to go to that specialist. So that floor broker comes over to where this trading is going on, and now they have to make the decision. Oh, let's see. There's like sellers everywhere, and I'm the only buyer. That means I can throw out some discount bids, right? Well, maybe some of the sellers start to, or maybe the person who's a buyer, the guy you wanted to, or your floor broker, all of a sudden they notice, hey, there's other buyers coming into the market here, right? Like if I want to buy this, I better pay up. I better be willing to pay a higher price. And that's when you get action like this, when you get to support and you start moving higher. Now, the floor brokers, they don't care why you're buying your 1 million shares. Their job is just to go over there and execute it. They don't overthink it. They just go over there. So I think what I want you to think about is this. And again, it doesn't happen anymore because everything is electronic, but just think about it as you got this whole group of people down here. Some are interested in selling, some are interested in buying. But it turns out that the buyers are going to kind of win out. And then as it starts to move higher, maybe the people that want to sell pull back. It's like, hey, this thing is rallying. I'm going to just step away for a minute here. Or other buyers say, hey, this thing is rallying. I better jump and go get ahead. So these moves off of resistance or off of support are really just kind of a short-term equilibrium thing. These floor brokers are not thinking, oh, Johnson & Johnson just said this, so I'm going to go buy the healthcare ETF. They get their orders. They go into the market and it's like, hey, buy it at the best price you can. If there's a lot of other buyers around and there's no sellers, you might be forced to pay up a little bit. You don't want to miss the trade. You don't want to call your client back and say, hey, I didn't buy anything. Sorry, I missed it. That's a good way to get fired from a firm because they want their trade executed. And if you call them up and it's like, hey, how much have I done? Oh, sorry, you haven't done anything. It's like, what? Why didn't you buy anything? Oh, well, I thought it was going to go lower, blah, blah, blah. And it's like, it's not their job to mastermind the order. It's their job to go out there and just try to get it done in line. So this is why you get these reversals. And this is why you get these reversals. It's not because of news. It's just because of the psychology of the people that are doing the trading here. All right. So the financials had a pretty big day yesterday. So this tells me that bank industry we've been looking at must have held. Let me clean this up a little here. But not coincidentally, check this out. Where did yesterday's rally stall out? And the answer is right here. All right. So support over here. This is the 34.75 level. Turn into resistance here. And now it's resistance there again. So look where we are in the pre-market, 34.74. And this line here is 34.74. I'll make it 34.75. So if you were trading this yesterday and you were saying, all right, well, financials are rallying here and I just bought some, where should I think about selling? Oh, look at that. We're getting close to this important price level. What was support became resistance. So that tells me that the bank industry probably did very well. Yeah, and so look at this. So here we have the bank ETF holding this support, and it got to the support and rally. So just think about those guys down on the floor. Oh, it looks like this support's going to hold. I want to buy. The price has stopped going lower. That must mean there's other buyers coming into the market, because if there weren't other buyers, it would keep going lower. So if I want to buy, I better go out and be willing to pay a higher price than what these other buyers are willing to pay. And this gets us to rally. This is why you get these bounces off of support. So this is why we pay attention to where the support and resistance levels are, because when we get to them, there tend to be these moves. And like right here, right? I mean, look at where the last area of support is here. So this is the bank meltdown that happened back in March. And look at where we ran into resistance. Pretty much like it's the exact same level as this last little area of support before we completely fell apart. So there's people who bought here who thought like, oh man, this thing is down 7%. I'm going to go out and buy it. The next day it's like, oh, it keeps going lower. And this is why you got to worry about not trying to catch the bottom, I should say. Wait until something reverses before you get in, because then you won't be the person who bought here who is now underwater. So now you got people who bought back here and they're trying to sell over here to get out at break even. I would say short term, yeah, I would be looking for resistance right around at this little top here. So maybe not 40, maybe like 39.80. And then if this resistance breaks, probably be a little bit of resistance around here, around 41. Because that was kind of important. And then up here, you got this 40, let's call it 42.50. This is your form. So I would say that this is, I mean, there are different levels of different degrees. Is it major support? Is it minor support? Is it major resistance? Like I would say that this is probably minor resistance if it gets there, because it was just a peak there one time. This might be maybe intermediate resistance. And then up here, you'd probably have pretty longer term resistance. And it just kind of goes by, all right, well, this was kind of the biggest major top that we've had this year. So there's a good chance there's going to be resistance there again. So, I mean, it's not something you can really calculate perfectly. It just kind of comes, I guess, with a little bit of time. I mean, you know, sometimes there's support that holds out for years. Sometimes there's support that holds out for 2 days or 3 days. So, but yeah, so what I do is very simply here, right? What am I doing? I'm looking at former peaks and I'm looking at former bottoms. So peak here, good chance it's resistance. Valley here, or a bottom if there's resistance. Peak here, good chance there's resistance. You can even see that here, right? At the resistance there. And then, so this is July 27th. And this is August 7th. So you look for a lot of people ask me, right? Matt lost his stream. Seems like everything's going okay.
Yeah, everything's fine on our side. It had to be over on his end.
So people ask me, like, how do you know where the support and the resistance is? And it's like, well, it's pretty simple. You just look at former levels that were support and resistance. Like right here is a good example. You get resistance here because it was resistance here. Down here, you get support here because it was support here. So we were to fly back in time here and we had some short positions. and this is going lower, and we start to think, gee, where should I buy? Let me look in the past. Oh, there was a kind of an important bottom down around 44. So there's a good chance there's going to be an important bottom again around 44. So here's where I cover. Oh, looks like we're going to hold. Looks like we're going to move higher. I'm going to jump back in. Where should I sell? Oh, former resistance level. There's a good chance there's going to be resistance there. So that'll be my target. So you're buying when you get to former support. You're selling when you get to former resistance. So you're letting the market tell you what to do. All right. So I would assume that the CPI is out now. And let's just see if the market's reacting to it. And the answer is not really. 444. So I guess we are down a little bit. So does that mean that it came in higher than estimated? It's probably too soon to see, but it came in at 3.7. Yeah, okay. Wait, sorry. I think that estimates were 3.2. I'm pretty sure the estimates were 3.2. So that would make sense. So we're higher than estimated, not surprisingly, because of the move we've had up in oil and the CRB, which I was just showing you. So why is this bad? Well, if the Fed needs to keep raising rates, that's bad for the market. Oh, so it was slightly better, a teeny bit better than estimated. But regardless, if rates are going higher, it costs companies more money to operate. So that takes money right out of the bottom line. And also, too, higher interest rates give the stock market, competition. It's like, all right, well, hey, I can risk in being in the stock market, or I can go over into bonds and make a guaranteed 5%. August core inflation rose 0.3% hotter. That's like the new buzzword. I really hate how these buzzwords come in and out. It's like, oh, it's a hot print. I mean, disruptive technology. No one started saying that until like 5 or 10 years ago. Source. Oh, we source our goods here. I mean, that's a kind of a new one too. All right, August core inflation, excluding food and energy, rose 0.3% hotter than expected. Not a surprise.
That's what most of Apple's Apple Day yesterday was all about, how green they were and how they're carbon neutral.
Really?
Yeah.
So, yeah, I got news for these people. I mean, in another 20,000 years, there's going to be another ice age. So we're not going to be worried about, not that I'm going to be here, but we're not going to be worried about global warming assuming we still have a civilization, which is very, very questionable at this point. I don't think we'll be here in 20,000 years.
Man, I don't know that we'll make it along. I'm thinking maybe a couple hundred more. I mean, we're pretty corrupt. And I know corruption's been, throughout history, but man, our form of America has really taken a turn.
Yeah, but you got other things too, right? You could have the meteorite.
Oh yeah.
Global pandemic. I don't think a pandemic would end civilization, because there would be pockets of people that survive, but it would certainly throw things back. But what's kind of interesting, right, is if you go back 20, 30, 40 years, a lot of people said, oh, in the future, we're going to have this overpopulation, and that's going to be a big problem, right? Now, scientists are saying in the future, one of the biggest problems we could have is a depopulation, population getting smaller. And there's all kinds of statistics that back this up. You got cultural things, right? Whereas back in the 1800s, people had tons of kids. Now some people don't have kids. People have 1 or 2 kids. The sperm rates for men are down dramatically. No one really knows why over the last 50 some odd years. So I think it has to do with a couple different things culturally, but I think also that there's chemicals in the plastics that are messing with people's DNA. I do work for the Stanford Land Trust, and we had this marine biologist speak a few months ago and was talking about how biologists are finding transgender turtles now, which they never existed until, or I don't know if existed is the right word, but They never found them until like 20 or 30 years ago. So they suspect that there's something going on with the plastics and the DNA. So when you hear all this stuff about how there's a lot more transgender people now, I mean, it's not just a social thing; it's physiological. I mean, I guess there's some of each. But anyway, I mean, I'm 54. I don't plan on being around for more than another. I don't know. I got
Don't
pretty
date
good genes.
yourself. Don't say it.
Everyone lives into their 90s.
Yeah, there you go. There you go. 90s, 100. I'm gonna get me a $1.20. Why not?
And you know what's funny is that, you know, like my grandfather, Carl. I mean, the dude today, he smoked, he drank, he literally went to McDonald's every morning, like literally for years. He would go meet his old friends at McDonald's, and you know, he lives to 95.
Nothing wrong
Everyone
with
in
that.
his family, yeah, all his brothers and sisters live into their 90s. But going back to that, right? So now everyone, so my 4 grandparents, like my grandfather on one side was a family of 11. There was 11 kids, but that was on the farm, right? So you have a lot of kids, so you have a lot of people to work the farm. Then you also had no birth control, or not, like you didn't have the pill. And people that are religious think you're supposed to have a lot of kids. So all the Catholic families back then, there would always be 10 or 12 kids. So both of my Italian grandparents, actually I have 3 Italian grandparents, they all came from families of, I think my grandmother on my mother's side was the least, and that there was 8 kids in that family. So anyway, not to get worried about it or anything, but because we're probably all going to be gone before we have to.
Yeah.
But anyway, I don't know something. But listen, man, how many species have lived that have gone extinct? You know, most of them. You know, millions, right? So, and did you know that at one time there was 4 different types of humanoids on the planet?
Oh, yeah.
They used to think it was just this linear thing where we evolved from this to this to this to this, but now it's like there were these different pockets of individuals came out of Africa at different times. Like this one group came out and went up to Europe, and they evolved into Neanderthals. So then when another group, you know, how many thousands and thousands of years later, came out of Africa and they were Homo sapiens, well, they met up with the Neanderthals and they intermingled with them. So now everyone who's European has a little bit of Neanderthal DNA in them, like 2 or 3%. Maddie B, yeah, Maddie breaks the tradition with all the kids that they have.
Right.
Gosh, you know, I can't handle 2 kids. I don't know how people handle more than that.
You know, it's the expense, man. When I had 3, right, I had a race car. I was having I could do whatever I wanted. But that 4th one came out, and he ate more and he pooped more. It was just expensive. I had to get rid of the race car, all the extra stuff I did just to pay for that 4th kid, and it was brutal.
Yeah, and then you got to pay. College is so friggin' expensive. All right, so let's see what we got going on in the news here. Russia's offense is starting to reverse. Russia's offense to reverse Ukraine's gains is stalling. Moscow sent 50,000 troops in a bid to retake the city of Kupiansk. The Ukrainians are holding their ground and trying to maintain a semblance of normal life. Oh, look at that. Russian Navy shipyard targeted by missile strike in Sevastopol. 2 vessels hit. It really just kind of feels like, I don't know.
Like we're trying like somebody's trying to push a war.
Yeah, it just seems like something's going to, you know, I mean, you got to understand, right? It's like a lot of wars start by accident. Mm-hmm. Like you get a rogue officer or someone accidentally shoots down the wrong plane. So just say, hypothetically speaking, the Russians accidentally shoot down a commercial airliner that is going over Poland and a lot of people die, right? Well, would that get NATO involved in the war? I mean, you know, and then that would follow that we would get involved. I mean, it's just, you know, it's not unprecedented, right? Remember when we shot down that Iranian passenger jet? Yeah. Was it the USS Stark, I think? I forget.
Listen, there's all kinds of stuff that happens like that all the time. Didn't Russia just shoot down a airliner, or somebody did it here a little while ago?
Yeah, as a matter of fact, they did.
Yeah, and I mean, so
I think that was in Syria.
But the only problem is that we're so close to the actual focal point of starting a world war that any small thing now could trigger it, and it's just a shame because we don't have to be here.
Yeah, yeah. I mean, yeah, this whole war out there never should have happened. I mean, it's based on oil, man. It's like every time oil gets up to around $100 a barrel, Russia goes and invades another country. So what happened the last time they went into Crimea, when they went into Russia? Let's see. U.S. CEO Binance.US CEO leaves in battle of crypto exchanges. Will be succeeded on an intern basis by the company's chief. We haven't. When I first started teaching, like this was all so. Cryptos is like that's all anyone really wanted to talk about, and now it's like no one ever even asks me questions about cryptos anymore. Crypto, Bitcoin, US dollar. So there was some kind of a rapid move lower, rapid move higher yesterday. But even if we see here, we could see these same principles playing out in that support here became resistance over here. Resistance here became support here. Fast move down, fast move up. So how is it that we're seeing the same things happen in Bitcoin as we see in stocks, as we see in the coffee market or commodities? Well, it's because we're looking at the human psychology. Here you get your fast move up here. So you didn't have a lot of people who sold here who are trying to buy on the way back down. Same thing here. Fast move up, fast move down. Then when we get into these ranges, you still have the same things going on with buyer and seller's remorse, but because we're in the range, there's just a lot more vested interest builds around these price levels. Whereas you get something like this, and for whatever reason, we just blew right through these levels. Well, then when we reverse and get back to those levels, there's a chance that we get a fast move back down. So it's kind of a good thing to know, right? I mean, it could help you with your trading. With all else being equal, say you want to buy something. Well, if you buy something that made a rapid move lower, there's a good chance will make a rapid move higher if it reverses. Whereas if something makes a slow move lower and it reverses, there's a chance that it's going to make a slow move higher. So anyway, just remember human emotions. All right.
You can't really sell it right now anyway. BTC, I think, didn't Biden pass a law where all crypto is 40% when you sell it, the tax on it?
I don't know.
I'll look that up and see if I can.
I haven't heard that. Would have surprised me though. I mean, I think I don't know, man. I think the whole capital gains tax thing is BS because first of all, it's money that's already spent. And it's not just like, it's not just like.
Just think about this, right? So think about this. Just for instance, let's look at a boat. Say you buy a $7,500 boat from a boat dealer. You go into the title office with him. He hasn't paid the taxes on it yet because he bought it from a guy that gave it to him. So you guys go in there. He pays the taxes on the $7,500. He passes the title to you. You walk up to the window. You title it in your name. You pay the taxes on the $7,500. So they can make double what that boat is worth just on the taxes on title exchanges over the course of the lifetime of that boat. It's a ripoff. The whole thing is.
Yeah, I mean, if you inherit money or you leave money to someone, that money has already been taxed. So I don't think you should have an inheritance tax. And the thing with the capital gains tax is people think like, oh, it's all these like rich people that have stocks. Well, it's not. What if what if your parents die and they leave you their house that they bought for $50,000 and now it's worth $500,000? And so the capital gains tax is 30%. So you got to come up with over $100,000. And it's like, you might just be forced to sell the house just so you could pay off the capital gains. Is it time to buy Pfizer? Let me go take a look at Pfizer. I don't really proclaim to know about companies' fundamentals, but I would look at the charts here and I would say, yeah, I don't think it would be time to buy it. See, now my philosophy or my style is to wait for the reversal to start. Because just because something is oversold and it's at support, which we can see here, right? Support back here, doesn't necessarily mean that it's going to reverse. So from a trading point of view, I mean, I don't know where the stock's going to be in 10 years or 5 years or 2 years, but from a trading point of view, I would look at this and say, all right, well, what could give me a little bit of confidence that a reversal is actually underway? When should I jump in? And remembering that there's most volume trades on opens and closes, which means there's going to be resistance at levels that have been opens and closes. Well, that level there to me looks pretty important. So this is 34.25. And ironically enough, look at that. That's right where we're trading this morning. So the low trade here was 34.26. The close here was 34.28. This was close here at 34.25. The opening trade here, 34.24. Yesterday's high trade, 34.21. So I would say if this thing clears this level, that's when I would think it would be time to buy. So maybe if it got up to around maybe 34.50, that's where I would consider jumping in. So we're not catching the exact bottom, but we're not really trying to. We're just trying to stack the odds in our favor. And just because something's down big and oversold doesn't mean it can't keep going more. But if you forget about just price and just think, all right, what's a good strategy to make money here? I'm going to jump in after the reversal starts. I'm going to give up a few points, but it's like a risk reward thing. I'm not going to take the risk of just buying it and having it keep going lower. See, if you wait, it's not a guarantee, obviously, like nothing is. But if you wait for a reversal, you're buying it for like a logical reason. If you're buying it just because it's down a lot, I mean, maybe it's an educated guess, but it's a guess, right? You're guessing that it's going to reverse. It hasn't really shown you any signs yet that it's going to reverse. But when it starts to reverse, then you kind of just jump in and it puts the odds in your favor. At least that's the way I think about it. Like, for example, I think there's a good thing to show here on Johnson & Johnson, right? So, or no, not Johnson & Johnson. I think Lilly is what I wanted to bring up here. So now when this made this move higher here, I thought, all right, well, there's a good chance that this thing is overdone and it's going to reverse. Okay. So what did I do? I picked a level that I said, all right, well, if it gets below that level, that's where I'll take my position. Okay. Now, guess what? I was wrong because it keeps going higher. But I wouldn't have gotten hurt because I never would have taken a position because the reversal never started. If we got below I guess this is 547, that's where I would have considered buying puts, like if this support breaks. But we never got there, so I never would have taken the trade, and I would not be underwater right now. Whereas if I bought puts here, the stock is up 50 or the stock is up 10%. So my puts would probably be down a lot here. All right, everyone, I'm going to get going because I got to get on other call. All right, everybody, I guess I will see you all tomorrow morning. Thanks so much and have a good day.